Welcome to Table Talk with TLC. I'm your host Siddhansh, and today I've got Ronit with me from Spare. Hi Ronit, how are you?
All good. Thanks for having me, Siddhansh. How's it going?
Yeah, it's great. It's a pleasure talking to you. I mean, the best part about me hosting podcasts is that I get to talk to a lot of entrepreneurs, people who've done pretty well in their life and pretty early as well, because I've spoken to a lot of people who have started businesses or done exceptionally well in their career very early on. And I think you're one of them. So, welcome to Table Talk, TLC.
Once again, thanks for having me. It's a pleasure being here. Looking forward to our conversation.
Okay, so tell me about Spare. I saw the website today, and tell me more about it. What is it? Is it an investing platform? Is it something that you use for? I like to think of it as a piggy bank, but yeah.
Right. So a lot of people have really, termed it as something of a Gulak-based app, which to an extent for the Indian Gen Z who really, try to resonate with that. It works, it turns out to be a Gulak platform. But let me just, go ahead and speak about Spare as a whole. So Spare is essentially a micro investing app or a platform that lets users invest their spare change whenever they make a digital transaction. So say for example, you go to a Starbucks and you swipe your debit card and say you make a transaction of 291 rupees. So what the app essentially does is it knows about the transaction because of smart algorithm that we've created over the past couple of months. And we've tied up with various banks. There's something known as a funding source and a tracking source. So whenever you swipe your card, you make a UPI payment, your Paytm wallet use, we know about the transaction since we tied up with these respective players. And what it does is it rounds it up to the nearest 10 bucks. So that 291 becomes 300. And the remaining 9 bucks is automatically invested into a diversified portfolio of your choice. It could be index funds, ETFs, mutual funds to begin with. And we'll definitely be exploring various other asset classes in the future.
Hmm.
And Spare It, we probably thought about this idea sometime in March 2020, and it took us close to 7 to 8 months to just realize if something of something like a micro investing platform can really work in India because India's financial markets are so tightly regulated. You have various governing bodies such as SEBI, RBI in the picture. We just wanted to understand that hey, is micro investing really essential? First thing, is it going to fit the market we're targeting? And thirdly, if the regulation allows us to do that. So we actually regulated by SEBI. We are licensed by AMFI, and we understand the purview of RBI too. So that's a little about Spare It and the the legalities around it.
Hmm. Tell me about micro investing. What is it? Because if you look at people who talk about investing, they're usually talking of lump sum amounts or periodic investing. What is micro investing? How does it help?
Right. So, micro investing, a lot of people tend to think that, okay, it's 5,000, 10,000 bucks, 100 bucks, 500 bucks. I was like, and back of my head, I was like, that can't be micro because looking at our demographic, a lot of tier two, tier three cities don't even want to physically invest that kind of money. So, for example, personally, I might have various other investment apps, which I wouldn't want to name, but say I have various other investment apps and I absolutely love their design. I love what they're offering. And you can also invest as little as 500,000 bucks on that platform. But physically and mentally choosing which fund to invest in, it takes a lot from the person to really go out there and do it. Actually click the button and be like, hey, I want to invest this amount. But when you actually physically have to go and type in like 5,000 rupees, 2,000 rupees and click buy, it never really happens. So what we really tried doing with micro investing is we tried putting splurging and spending and mixing that up with rewarding. I'm a big believer that, anything like consumption and fintech, if they merge together, it can probably disrupt a potential market. And that
Mm,
market is very much untapped. So, again, back to micro investing, I'm sure people, even at who are even 25 or 28 years old, ignore people who are 18, 19. People who are even 25, 28. They do not know something such as digital gold. You can buy 24 karat digital gold for as little as 50 bucks, 100 bucks, and even 20 bucks. And you're like, how do you do this? Well, there are platforms that offer you to do that. And we just want to merge that with a reward system. So it's like guilt-free spending. So whenever you buy something, whenever you're eating a pizza, whenever you go on a shopping spree, a very small percentage of that is automatically invested without you doing anything at all. The money is pulled out automatically. The money is invested automatically in the fund you've chosen in the starting. So the flow is extremely simple. The onboarding is, we've taken about 6 to 7 months nearly just to understand the onboarding process. We tied up with various players like Sciency, Digio to really understand what can we do to smooth the onboarding. So we are big believers on that front also.
mm. That's great. So tell me more about investing because as you said, people in that even in their 25, 26 years of age don't know about investing. And
Right,
one of the things that I've like consider myself really lucky on was that I got into the world of finance pretty early, as I told you, when I was like 17. I started reading up and listening to stuff about finance, and literally like the first couple of times I heard what it can do, like what the power of compounding, what the power of starting investing early is, it literally blew my mind. Like you could start investing at 20, and you'd get something else at 60, and you could start investing at 30 and you'll get half of it at 60. So tell
right.
me about that. Why should people invest?
Before speaking, no, definitely. So before speaking about compounding, power of compounding, would definitely like to, speak about the market size, the potential that India really has, and what we're really lacking. Let me throw some figures and research stats over here. India is probably 2.5% or less than 3% of the Indian population really invests in the market. Just take that for a second. Less than 3% of the population invest in the equity markets. First thing. Second thing, you have
Equity
competitors
market is
like
the stock
China.
market, right?
Sorry.
Equity markets
Yes,
is
I'm speaking
means
of
the stock
like
market.
mutual funds and
Yeah,
right,
stocks, mutual
exactly.
funds, and
That's
money
less than
markets.
3% of the population that invests in the equity markets. You have China, which is probably more populated than India. Over there, the percentage is 7%. So that gap gives you a big scare that, hey, someone like China, there's a 4% gap, and the 4% is an extremely large number. The third aspect is America. This is a very mind blowing fact. 55% of Americans invest in the markets. More than
Mm,
one in every two persons invest in the market in the US. And in India, it's 3%. So the gap is extremely huge. The only problem India really lacks is financial literacy. And I feel that's something a lot of people are trying to solve. But a lot of people don't understand that in tier two, tier three cities, people do not understand that, hey, what is KYC? What is, even when you open an app, they do not know what is sign up, what is login. So, it's not only about investing, they do not know the basic features of an app. So, solving financial literacy is a very, very, very big problem in the country, and there are various companies which have hit the unicorn status that are really trying their level best to work on financial literacy. They're going to many states, conducting a lot of research, a lot of educational events, and hats off to them. I feel that's where the larger market really lies,
uh,
and
okay,
it's
so
a sorry.
I'm sorry to cut you off, but something just popped into my mind. So if you see it in India, we've been in the money market news since like the scam happened in 1992, and after
Right.
that the scam like was a pretty big scam. A lot was big news. Then even the 2008 financial crisis happened. So it's not that India as a country is devoid of financial news. So why do you think? that it's still lacking in financial literacy, because people do know about the money markets.
No, they don't. So that's what you and I think. Like if you get out and if you ask, you probably go and ask your cook or your house help that, hey, do you know what is can you can buy a stock of Reliance? He'll be like, what are you trying to say? It's as simple as that. Like India as a market, of course, like 3% of India is very, very, very large, and you can't even fathom the number that really
Number.
speaks about. But that 97%, you and me have not even seen. You, if you go to any tier two city, any village, there'll be not even, it'll be like 1 in 5,000 people who must have even just heard of the stock market, forget investing, you know. So that's the difference. And that's why you need to understand micro investing comes into play. And with UPI being, with India going digital completely, and with something like unified payment interface coming to play, with account aggregation platforms that are going to be launched, it's completely going to change insurance, fintech specifically, and investment products for financial services companies in the next 3 to 5 years. You're going to see
Hmm.
a huge rise in fintech and insurance tech, and that's going to tap into the tier two, tier three cities. And even I fail to understand that, hey, how don't people really know about stock market, about mutual fund? The government tried advertising so much about mutual funds on TV. Every third or fourth ad is about mutual fund investing, but they do not know the definition of mutual funds. Okay, yeah, they spoke about mutual fund, but what is it exactly? It's a portfolio
Yeah.
of various
Huh.
stocks. You can buy units. For the longest time, I mean, I thought I was financially literate till 20, but at 20, I actually knew the nitty-gritties and the deep details about, mutual funds. What are units? What are the charges? Every various mutual fund has different charges. These are things that a lot. What is a liquid fund? Why is it important? Something like ISS, a liquid fund has never underperformed ever in its life. Why you should park your money there? These are questions that a lot of people can't even answer, don't even have answers to, because they do not know the basic reason as to what is that underlying product. So to an extent, of course, we aren't trying to solve and get 10% of India to come on an
Invest.
app. But even if you get 0.1%, half a percent, 0.2% for that matter, you make a difference. You make a large difference.
Even if the 3% that's already
That's
investing
more about it.
invests more, then that's still you know that's still something that's
Exactly.
a
Exactly.
difference. So tell
And
me more
honestly,
about investing, I
micro
think.
investing is
uh,
is nothing new. Right, no,
hmm.
definitely. So micro investing is not a new concept, and it already does exist in other countries, specifically in the US. We would call ourselves like the Acons of India. Let's put it that way. Okay, Acons, the conceptualized this probably in 2013, 2014, I would say, and what about 2.5 weeks, 3 weeks back, they hit a $2 billion valuation through the SPAC route. And they were valued at $860 million for the longest time. And just 2 weeks before this news comes out, I was like, hey, micro, see, if a demographic, if you speak about US, and if you speak about that demographic, and if you talk about investments there, 55% of the population invests. Do they really need micro investing? Of course not. India, the demographic is different. You are a poorer country, you are in a developing state, you want to start with very small amounts. In the US, what is $1 in the US and what is $1 in India? The difference is huge. Over there,
Hmm.
people are paying $1 as subscription to use the app every month. Over here, no one would pay you even $10 to use the app a month. So micro investing works, and it will work in a country like India.
But yeah, tell me more about. I mean, I tend to, I've been telling my friends ever since I started, learning about finance, that okay, you guys should get into finance as well. You guys should, start investing. Maybe start from a very small amount, like start an SIP, man. What's up? So I want to solidify that for them, because a lot of people listening to this are going to be college students, probably my age. So
Right.
why don't you tell them why they should invest, why they should, ask their parents to
So
put all the money, like
definitely
remove the
on,
money from FDs.
so you should move your money from the FDs, but not completely. It's again diversifying, right? You always
Yeah.
need some amount to park, which is very safe. So I believe at this stage, if you go all out and get risky, I mean, it's not a cliche statement, but it's personally what I also feel. You know, SIPs work. SIPs are awesome. It's great. It's
What are
something known as
SIPs?
dollar cost averaging. Sorry.
What are SIPs? People ask.
SIPs, it's a systematic investment plan. So what you really do is, SIPs help you invest a particular sum of money which you choose. That could be 500,000, 5,000 bucks. Say you want to invest 1,000 bucks on 12th Jan, or on 12th on 12th of every month. So on 12th Jan, 12th Feb, 12th March, it will pull out the money automatically and invest it for you in a particular fund which you've chosen, and that helps in dollar cost averaging or rupee cost averaging. So say the market is at an all-time high, and if it falls and it keeps falling, and every month you keep buying, so your average keeps falling, and that's how you, in the long run, it works out. And I know, in fact, a lot of professionals, CEOs of companies, vice presidents, etc., they are strong believers of SIPs. Personally, I never started with the SIP in early age because I was more towards just delivery based investing. But um, off lately have started with SIPs. It's working out very well. Even though the markets are at all time high, it doesn't bother me because the amount relatively is smaller, and it gives you a sense of, hey, this is happening. Or you are investing, getting a feel of the market. Your money is parked in a safe place, or even if not a safe place, in the longer run, your money is not going to, be in a negative state of
Hmm.
percentage or whatever.
Yeah. With SIPs, I feel, the best part about SIPs is that you invest a very small amount of money every month. Let's just say I'm, earning 20,000 a month, and 1,000 of that as is going for an SIP. Let's just say I don't have a lot of needs. Obviously, I'm a college student. I don't have a lot of money. My dad gives me a small amount of money. It's just say 20,000 up per month, just as to defer his tax maybe. So I just invest $1,000 over the longer run. I don't even realize how big that amount can become. I think that's where
Right.
the compound interest game comes in. So tell me.
Definitely. So, what is compound interest? I know it's a very basic question. A lot of people don't understand the power. See, people tend to say it's the seventh, eighth, ninth, whatever wonder of the world, and that's a fact because
Eighth wonder of the world, yeah.
uh,
Einstein said it's the eighth wonder of the
yeah,
world, I think.
exactly. Einstein makes it come as the eighth wonder of the world, and why does he say that? Because um, you need to understand the concept of reinvesting your dividends, reinvesting your profits, reinvesting uh, everything that's coming to you. You're not pulling it out. It's
Hmm.
just going back into that. So it's like, if you do a simple math, like 10% of one, or 10% of 1.1 over the next 20 years, if you see that difference, it'll be very large. It's going to be extremely huge. Or like zero point zero 0.01 and zero point 0.1, if you square both of them, you can see the big difference. And that's where you actually add, your dividends. You keep adding your dividends to your, or your profits to your existing portfolio
What are
without really,
dividends?
pulling. Dividends is what a company pays you, so it is, in layman terms, it is when you buy a stock, and if you hold it for a longer period, when the company has no cash flow and when they make profits, they tend to reward their, the people, their stakeholders, their shareholders, by providing them dividends.
Yeah.
And in layman terms, that's what dividends are. So you can get dividends for 200 rupees, 500 rupees, $20, depending on the amount of shares you buy of a company. So yeah,
Yeah.
that's in
Sorry,
layman
I'm
terms,
asking
that's
you
what dividends
very,
are.
very basic questions because right now
No, of course, of course.
and if I were to define a stock or a share of a market, it would be that okay, I have this company, I have 100% of my company. I Let's just say take 49% of it, of what it's worth, and I give it to the public. That's what companies do. IPOs, initial public
Uh,
offerings,
right,
they put
right.
that
So
out.
IPOs are basically where private companies, when they reach a certain level, or they reach a certain threshold, and they feel they need to go public in order to raise more capital. That's how you go and you put yourself out there with an investment banker. You apply for IPO, or you raise X amount of money, and there are various technical nitty-gritties into how the IPO happens and etc. Let's not get
Yeah.
into that. But IPO
Uh,
is basically where a company goes public, and yeah, you're right. The way
then
you mentioned
you
it,
can
it's
invest in
definitely
that
that.
company. You can,
Right,
let's just say that company has 100 stocks. It in an IPO, it gives out 49 of its stocks,
right.
and each stock is valued at 2 rupees.
A
So
certain
the
face
company as a
value.
whole
Right,
is valued at 200 rupees, and you can buy this one stock for 2 rupees and essentially hold then 1% of that company. So
exactly.
so
Right.
in part, you are basically 1% owner of the company
Right.
if
So
you
a very
say.
close friend of mine, I think so, he called me the other day and he's like, "Hey Ronit, I'm a very big fan of Manchester United and I really want to own the football team." So I was like, "How do you plan to do that?" He's like, "I don't know. The stock isn't available in India, so I'm just gonna plan a way to go to the the London Stock Exchange and try to buy United stock." I was like, okay, that makes sense, but what are you going to get out of it? You're going to buy like one share. He's like, but the sense that, hey, I'm a holder of the stock. So to
Yeah.
answer your question, yes, you are a owner of the company in a very small way when you
uh,
own or when you purchase the stock, right?
yeah, and as the company grows, your money grows as well. It's like
Yes,
you gave the
that's the
companies
underlying,
a
right?
certain amount of money. They use that to generate more profits, and some part of it is
right,
owned by you as well.
exactly,
So yeah, but what people do is, they generally, when we talk about the stock markets, people are like, okay, like if you see anyone who's maybe older than a dad's age, but because recently even some of our parents have gotten financially literate, but above that, and many other parents, when we talk about the stock market, they equate it with a lot of risk, that company डूब गई,
right.
and risk सट्टा bazaar, and all of that. What's happening there? Tell me about that.
So people, the digital age, what it has really done to us is you tend to get attracted to a lot of schemes that, hey, 25 din mein paisa double. You've got you've got these various YouTube videos teaching you these technical analysis, all of that. Fair enough. Some of them work, some of them don't. But the problem is when people start to leverage, when people start to get greedy. This has personally happened with me in the past. I was great in trading and investing in the markets for about a year and a half, and that led me to go on to derivative products. And when you get into derivatives, you fail to understand leverage. You start getting greedy. At that age, when you start making XYZ amount of money, you feel like, okay, when a kid makes a couple of $1,000 or a couple of lakhs, you're like, wow, you're just on top of the world and you just want more and more of it. And
What are derivatives?
derivatives are financially complex products, which are rather underlying products of a certain stock itself. But again, getting to derivatives, I can explain it in layman, but it is very complex to go into the nitty gritty of what are
Okay.
options, what are futures,
So
and how they are framed. And
they're just asset class, right?
it's
What?
it's an asset class. It's a very risky asset class. It is buying. You buy a stock only. It's the underlying of the actual stock you're buying. But
Hmm.
again, getting into the details, let's not do that.
Yeah.
The thing with derivatives are it's basically you leveraging a product. So it's like you pay 1,000 rupees for a stock which is actually worth 10,000 rupees or 5,000 rupees.
Hmm.
So when you make profits on stocks that are actually worth 5,000 when you only put $1,000. So it will grow so that much. So on $1,000 you can make returns of, instead of making 1 or 2% returns, you can make 5 times of that. So you can make 5, 10, 20% returns immediately. So
Yeah, I think
people
I've
get
heard of that.
attracted to this, right?
Yeah.
So it is leveraging. It is, and leveraging will always kill you. It will always, unless you are focused and dedicated and disciplined and know that, boss, okay, this has fallen by X amount of percentage or X amount of numbers. I need to exit now. I will take the loss. I take the hit. Then you're in the right space to do, complex financial products. But otherwise, don't even think of entering. And I'm speaking from personal experience. Made a lot of money, lost a lot of money, recovered everything, touch wood. But it has been a bumpy road in the past. Learned my mistakes. Today, I'm a big believer of trading and investing, but only buying by the amount I can afford. So if I can buy something worth 1, 2, 3, 5 lakhs, for example, I will only buy stocks worth that much. I'm not gonna go and leverage it to 50 lakhs, 20 lakhs, 10 lakhs, because it makes no sense. You can blow your account. So you rather stay
Yeah.
safe, look at buy your blue chips, buy a small cap if you think that's going to grow. Today I feel a sector like sugar can be okay. This is not a recommendation, let's just disclose that.
Yeah.
But I
This is
just
just
feel
for
like
educational
I just
purposes.
feel like in general, yeah, for education purpose, I just feel in general the infrastructure, the cement sector, um the sugar sector, I feel this is going to boom. By 2025, you'll see a big change. So if you put a small amount of 1,000, 5,000 rupees into this, okay, you might not make 5,000 rupees or 10,000 rupees, but you will make 1,000 rupees, 2,000 bucks, and you will see a great return. I always tell a lot of colleagues and a lot of friends that, hey, look at your investments in percentages and don't look at the amount of money you've received. Because like today, if I have, or if you have a budget of 10 lakh rupees, and if I have a budget of 1,000 rupees, I can make 10% and so can you. The only difference is you'll make 1 lakh rupee and I will make 100 rupees, but the percentage is the same. So you always, at the end of the day, when you give your money to an investment manager, what's the first question you'll ask him? Not how much money you're going to make. You'll ask him, kitna percentage are you going to give me in a
कितना
year?
रिटर्न है एनुअल रिटर्न
Pre-tax,
क्या है?
post-tax, in 3 years, and 4 years, KGO, all of that. So that's the basic of investing, and always speak in percentage. In fact, now I've started budgeting in percentage. Very funny. Like if I have X amount of, say, I have like 20 or 30,000 to spend in a month, I'll budget that in percent. Okay, this much goes into coffee. A month, this much goes into this, and I just divide into, like, a very interesting fact. This is something I just realized a couple of days back. In fact, we can probably do the math right now. It's something like, so every day you waste, okay, you're like, if you do 1 divided by 365, you're probably leaving 0.2% of your life, or of the year, by doing nothing. And there was a day where I probably was binge watching something for 4 days or 5 days, and I was like, I wasted 1% of my year on this. And I was like, wow, I gotta get back to work. So percentages does change your perspective in a lot of ways.
Yeah, even while handling managing your money, I think the first advice that anyone would give with regards to money is the 50/30/20 rule that people
That's
give.
basic and that's solid. It is very
Yeah,
solid. But if you want to be a little more risky, the 50/30/20 rule can be like, instead of saving 50%, to invest that 50%.
yeah. Like
Don't just keep it aside.
yeah,
Let it grow. What
tell
do
us
you
about
do?
the 50/30/20 rule. 50/30/20 rule.
So again, 50/30/20 can be very personal. It can be it can differ from each individual. According to me, I don't even look at that rule. I just be like, whatever amount I own. I read this one, or rather, I saw this one video once where Shaquille O'Neal is like, the reason I made it financially well in life, or did financially well in life, is because he's like, okay, a lot of people believe in 50/30/20 rule, but he's like, I believe in the 75 rule. I believe in putting 75% of that amount away, and not just away and investing it. He like, you gotta live off the remaining. If you can't do that much, you're going to get nowhere. You need to understand compounding and compounding. You put that aside, and not in safe and not in risky, in stocks that have a 50-50 chance maybe. But
Yeah.
if it works in your favor, you'd extremely, or even if you want to do the 75 rule, put 25% in saving of that 50, of that 75, and the remaining 50 of that in investments, but put a larger chunk into investments when you're younger, always.
Yeah.
And
Yeah.
India, though, it lacks your 18, 19, 20. No one knows anything, absolutely nothing about the markets. In fact, I have people, very close relatives, they are like older, like, 28, 30, 33. They possibly only invest because their spouse will make them invest, but otherwise they must never invest in their life. I was like,
Hmm.
hey, you gotta start. You gotta do this. I don't mind, removing X amount of time to help you out here. And that's the difference.
Yeah, yeah. I was speaking to my economics professor the other day, and we were talking about why is India not financially literate, or why does it not have a good relationship with money? Let's say because as Indians we are smart people. When it comes to hard sciences, we are smart people. But I think we like talked about how we are not taught economics that well. We're not taught about money from the early ages. Like compound interest was just a chapter in our maths book. We weren't even taught the practical applications of it. So,
The
like, if
advantages, the
we've
reasons
been
behind
talk,
it, right?
yeah, we've been talking about compounding. Let's just give them an example of what compounding is. So, I would like you to
Okay.
give an example of compounding so that we can blow their socks
So,
off.
more than that, I there are certain rules which I really, believe in. There's something known as the rule of, I believe so, it's something like the rule of 72, if I'm not mistaken, where whatever you do, you divide, I think so, by the number of years you want to hold it, and that's the kind of return it gives you. I might be mistaken over here, but the rule of compounding, let's say, if you have 10 bucks, you invest at 10 bucks, it gives you 10%. That's 1 rupee, that's 11 bucks. Now, if you remove that profit, you remove that 1 rupee, okay, and you keep that aside, you're again investing that 10 bucks and not on the 11 bucks. But on that 11 bucks, if you invest again, and if you get 10%, you make 1.1. And that's how compounding works. Then that 1.1 gets added to 11, that's 12.1. 12.1, 10%, that's 1.21. Then that gets added to 12.1 plus 1.21. And that's how it keeps on going. And that's how the math really works. And if you do this for larger chunks, you're right. If you start at 18, 19, 20, and by 30 you see you can make something, depending on your capital again, of course, but you can make a sizable chunk of money by starting with as little. I would just tell people, like, hey, start with 100 bucks a day. I know it sounds like, oh shit, 100 bucks is going towards, it's just going every day. But I promise
Hmm.
you, in 5 years, not in 10 years, you will see such a large change. You will be
Yeah.
like, wow, like, I just
Yeah,
want to
and
double this out.
yeah, even if you start with like 1,000 a month, like, do you have your phone on yourself? You can like, do you have
I
your phone
do.
with you? Yeah, so just calculate an
Yep.
SIP for 1,000 rupees per month for maybe like 40 years.
So again, depends, right? Like, so SIP, say you have something, a certain fund, say it gives you 12% a year, or say
Yeah,
it
I
gives
think
you
I think
15%.
10 to 15%. That's the average return on.
Let's say 15% on 1,000 bucks. Okay. Now say you invest 1,000 bucks. What? Uh,
Month.
how do you want to do this? Like a month? So
Yeah.
1,000 bucks a month, 15% a year. That's 7.5% a year. Okay. Now that gives you percent in 1,000. That gives you, wait, 0.075. Okay. Now the 1,000 bucks that you invest every month becomes 1,075. Okay. So that thousand becomes 75 rupees every month. So it's like you're making 900 over there just by compounding.
Hmm.
Okay. Apart from that compounding again growing.
Hmm.
Okay. So that how it really works. Now for SIP calculation, there's a calculator. Some of them are really, they're fake. They don't work out well. And I've actually tried and tested this out. You know, to break it down, there's like SIP calculator. The thing is, if you're calculating every month, there are a lot of things people take into consideration. Okay, charges. Okay, your brokerage.
Mm.
Okay, if you're investing $1,000, you're making $75. If that $75 invested on a certain day, so you have to take the average. If you invest on 15th of every month, then you have to take 15 days ka average. You have to keep, so this is a rough figure I've just given you over here. Don't catch me later. Oh, okay, you said
Yeah,
900
yeah.
bucks. No, it's a rough figure. But yeah, that's how it really works.
Yeah, but like just a
And
general for if you want to look at compounding, go on any
right.
SIP calculator. I think Grow's SIP calculator would be legitimate.
Oh, definitely. I
Yeah.
will wait. Let me check if I have the Grow app. Do I have the Grow app? Let's do this. We'll do this live.
Do you need me to give you the screen share option?
No, I have this on my phone. Let
Okay,
me just
cool.
check uh return SIP. Okay. So example, let's choose a ICICI Prudential Technology Direct Line Growth Fund. Okay, it's a growth fund, ICICI, which invests only in technology companies. Okay, to give you a brief about it, they claim in the past 3 years it's given 32%. It's given 32% returns, 32.65% returns over the past 3 years. And in this year, just in 1 year, it's given 133% return. Of course, the market, the bull market,
It's a bull
technology
run.
funds did very well. But average of 3 years, or rather over 3 years. So uh, 2019, 2020, 2021, it gave you 32%. Okay. Now, if you do SIP, say you invest, let's do $1,000. So, wait, let me calculate this. This is not going to 1,000, but let's just take a rough estimate. I'm going to say 1,000. Let's put, okay, so you invest $10,000. Okay. I don't know why this isn't
Okay,
calculating.
like if it's a problem, then
It's not calculating because it is the scroll not working. One sec. SIP.
okay.
For that matter, wait, now you've gotten me to figure out this way because this was
Cool.
working a couple of days back. SIP calculator.
The thing is, I wanted to show everyone the power of compounding. How stuff that you start today just as a habit can
Right.
generate so much
Oh,
wealth for
definitely.
you.
Wait, actually, wait. In fact, right now we have. Okay, here's a SIP calculator. Do you want me to share the screen? I can do that.
Yeah, I'll give you the access. Wait, yeah, go on.
1 second. Let me just see. This is okay. Great. Share screen. Can
Yep,
you see my screen?
yep.
Okay, great. So this is my SAP calculator, which is created by Grow. It's a very famous investment management, direct investment platform app. So over here, say this is SAP calculator. Say a monthly investment, you put it as, what did we speak about? 1,000, right?
1,000.
So you put 1,000 here. Okay. And say we want to expect a return of 15% because that could be a little bit a better fund. And time period, let's keep something like 5 years and not 10 years. So you end up investing 60,000 bucks. If you just invest every month, once a month, $1,000, you end up investing 60,000 over the next 5 years, and you make 29,000. Now, if
Yeah,
you do the math, 29,000, what? Uh,
like
682 divided by 60,000. Okay, you are
you
making
make 1/3.
49% return.
Yeah, yeah,
0.9, so that's 50% return you're making nearly in a span of 5 years with doing nothing, and that's just $1,000.
yeah.
And people
And
feel,
uh,
you invest $1,000, you make 500. No, that's not the
uh,
math. You know, it's people need to understand 50% is a lot of money. The percentage is phenomenal. And that's by you doing absolutely nothing in mutual funds.
yeah.
Your money has been invested in various companies.
Uh,
It's been
and
managed by
15% is an
professionals.
average return that a lot of mutual funds give.
Exactly.
It's not that we
And
are
this is not
riding
in a
on a very
risky. It's not in
yeah.
exactly right. And this is
Let's
not in
let's
a
let's
risky
take
asset
that
class.
let's take that time period to 10, 20, and 40. Let's just say I start
Unless,
investing
and
at
for
18.
information, um, Grow gave 32% in 3 years. So let's say gave 20%. This would have been even larger. No, the
Yeah,
ICICI fund. It would have been much
huh.
more. It would have been at least 35, 40,000. Now
Yeah,
let's
but right
invest
now
time
we're
period to 10 years.
taking an average of like the average time.
Right. Wow. Now just look at this. It's you're investing 1,20,000. Okay. And you're making more than you invested.
Mm.
Basically, you invest one lakh
Just in a
twenty
period of
thousand.
10
You're not
years.
making. You're making more than double. You're making what? Close to 120% here. Sorry, 110% here.
Hmm. And
In
this
a
is
span,
with
so
you doing nothing, just
nothing. Just
investing
it's
the
automatically
part.
investing $1,000 for
Yeah,
you at
yeah.
a 15% a year rate over 10 years. Now that now again, just take this into consideration. You're making more than 100% returns on a mutual fund, which is not risky. It is giving you like it's just hard for me to explain this. Now, if that 1,58,657 rupees was taken out because of you not compounding,
Hmm.
your returns would have been not barely anything.
Yeah, that would be simple interest,
The
and
size
that's
exactly, exactly. So that the reason is you get this is only because of compounding. The reason is more than your invested amount is only because of compounding. You would have probably
hmm.
lost 58,000 bucks or even more than that, or even a lakh possibly if you didn't compound.
Yeah.
And
So
I
this
remember on
use.
Sparrate, I'll just give
Huh.
an example. Sorry, on Sparrate, we had done this one, it was not a quiz, actually, somewhat like a Q&A kind of thing, where we said, would you want 100 crores by the end of the month, or would you want your money to double every day, starting as little as 2 rupees? You start with 2 rupees, and that 2 rupees doubles every single day for the next 30 days. What would you choose?
Huh. 2 to the power 30.
Everyone chose 100. People chose 100 crores, and I was like, hey, you make 120, more than that, probably more than 120 crores or something like that, if you chose the first option.
Yeah.
And a span, if that's like 2 rupees, 2, 4,
2.
8, 16, if you keep doubling that way for 30 days,
That's
it becomes
exponential.
more than, yeah, it becomes more than 100 crores, way more than 100
Yeah.
crores in just
Okay.
30 days. So
Hmm.
that's the basic. You just provide them with that particular option.
Let me tell them more. Okay. I'm sorry. I wanted to take but a lot of like I think I wanted to go another example. Can we do that?
Sure.
Yeah.
Do you want me to share
Yeah.
my screen?
Yeah. Yeah. Yeah.
Okay, sure.
Okay. So let's just say Sudhansh or anyone else started investing at 18, a thousand bucks every month, but doesn't really matter a lot.
Right,
By 28, just 10 years, he makes
right,
this much return, which is almost 1,60,000, where he invested just 1,20,000, and his total amount is somewhere around 2,80,000. Now he still wants to keep that amount running.
right,
He takes it to, let's just say, 60. He said that this is going to be my retirement fund. So what amount do I get at 60?
right. Now let's say that's a lump sum. So let's okay, so let's do it this way. Now we make this your 1 lakh. Okay, we make this 2 lakhs, not 1 lakh. Let's make it 2,80,000
No, no, no. Why?
to make
Why?
it
Like,
easier. Okay,
let's just say I want
wait.
to continue my SIP for the coming years. Let's just say I want to do that.
Okay, okay. I would say let's put it in this scenario. Let's
Okay.
pull out this amount, which is at
Uh-huh.
2,80,000, 78,000, 80,000, and let's invest in lump sum. Matlab a
Hmm.
one-time investment we do, and let's see what
Hmm.
that gives you in the next when you become
For
60. Okay,
30 years.
so say yep. Okay, great. Lump sum. Okay, let's do like 80,000 at a return of 15%, or let's take 12%. Let's be even more safe. Okay, and let's say in a span you're 28, so that's 38, 48, 58, so that's 32 years. Okay, so let's keep it as wow. This gives you only 30-year option. Okay, so this is 30 years. That's the amount you really make on a
That's
total investment of. Wait, this has come wrong. I don't know why it's wait,
two lakh
two
eighty
lakh
thousand.
eighty thousand.
That's the amount. Like you invested 2 lakh rupees. I think it's not taking more than 2 lakh.
It's not taking 80. It's just going to 2 lakhs.
Yeah, let's just say you pulled out that 80 for something that you needed, and you
Yeah,
invested
and let's say you invest 2 lakhs,
2 lakh,
and it's a
and
one time. You're not doing every
and
month,
yeah,
1,000,
yeah, you're
1,000.
just
No,
putting
one
that
time
two
investment.
lakh once when you're like 30,
Right.
and
In a
you're
fund
putting
that
it
gives you
further.
12% a year.
In a fund that gives you 12%
That's it.
a year, and
You're making
that's
60 lakhs.
you're making 60 lakhs just by doing nothing, and this is how you
Right.
beat inflation as well, because
See,
inflation.
inflation is 6%. If you make anything over 6%, absolutely anything over 6%, you're making some amount of money. And inflation, people just don't understand that inflation really kills you. Like today, if you buy a chocolate, a very small example, you buy a chocolate for $100, it becomes $106 next year. You won't realize that you buy it 6 rupees chalega. And that's how it works. And that's how it grows. It keeps going above, and you're like, wow, I'm
Yeah,
just making $100 a year.
yeah,
I'm
like that's
spending more than
huh,
I'm.
I like this is something that I realized जब मैं फिफ्थ क्लास में था, तब ट्राइमैक्स 35 रुपए की थी. आज खरीदने जाओ ट्राइमैक्स तो 50 रुपए की मिलती है. तो okay, that was
Exactly.
that
And
was how
plus,
I
you
looked
have
at inflation the first time.
it's what it's a purchase value. It's what money can really buy you. It is your real purchasing power. What
Hmm.
what keeps changing because not only of the amount of revenue or money you make, it's also because of the inflation which people do not take into consideration.
Hmm.
So yeah, I mean that's the
Yeah.
amount you make and it's phenomenal. 60 lakhs is not a small amount for anyone and any time at any point of time.
Hmm.
And on a mere amount of 2 lakh rupees, which is absolutely nothing when you're 28 years old. You say you
Yeah.
start working at 22, till 28, you will make probably, I don't know, like 40, 50 lakhs. Say
Hmm.
you invest 10% of that. Say you
Hmm.
invest on 5 lakhs. Forget 2 lakhs. Say
Hmm.
you invest 5 lakhs also. You
No,
probably wait while
I would let them
you
go
know.
play more safe. Let's say, I'll I'll say,
Okay, safer. Like,
हाँ, okay, I'll say कि तुम्हें नहीं पता तुम्हें क्या करना है. You haven't made any money,
huh.
and you say I want to go back to
Hmm.
SIPs. You say कि I want to go back to SIPs.
Right.
Let's can we go back to SIPs?
Right.
And आई जस्ट से कि मैं 1,000 रुपये ही
Sure.
डालूंगा. मेरी जेब में तो 1,000 ही रुपए हैं. मुझे कोई अच्छा, और मैं लेकिन मैं डाल सकता हूँ 30 साल के लिए. आई कैन वेट फॉर 30 years, 40. Like if I start investing at 20, I can
Right.
wait for, okay, it gives you only 30 years,
Right.
and you invest at a
30.
12% rate,
Right.
at a 12% rate, and this is what you earn. You invest what 3,60,000, and you get 35 lakhs when you know
35
when
lakhs.
you want to
30,
take it out.
you get basically your returns is 31 lakhs, and when you want to take it out, your right is 35 lakhs. And
Uh,
that is actually a
yeah.
great way of showing SIP right now for the sole reason that we only did 5 years, 7 years, 10 years. Now we need to do 30 years. And I'm not talking about doubling. Like we spoke about putting 1,20,000 and making 1,58,000. This is
Uh,
putting only 100% of 1,50,000, which is three, like what, a little more than that. You're paying 3,60,000 and I'm making 10x.
yeah, and that's just 1 0. I mean, if you
And
increase 1 0 on that, if you invest 10,000,
exactly,
that increases
exactly.
a lot other,
That
and
becomes, exactly, that puts, you make 3 crores.
yeah, I mean,
That's,
that's mind blown.
yeah.
And
And
if
3 crores when you're like what, today you're say 20. Okay, not 20, chalo, say you're 25, 30. 30 ke baad 30 saal, 60 years old, if you get 3 crores, 50 lakhs is what? Is you can live a comfortable. I know people who want to retire after making 10 crore rupees.
yeah,
Like you do this, you'll make like you can do this and make 3.5 crores. The remaining you will earn in your remaining life of your salary or whatever.
hmm,
It's it is phenomenal. And this is again, mind you, this is safe. This is very safe.
yeah,
12%. Okay, no, very safe. It's not some liquid fund making 6-7%, but 12% is ठीक है. If markets do well and if you make this
yeah.
15%, I don't know, like it'll give you 7 crores
7 crores. I mean, 12 to fifteen
on a
percent is like
3%.
the, just 3%. 12 to
Now
fifteen
let's
percent
let, let's let's break it down more. 12%, 15, 3% difference every year.
year.
Okay, you do basically what you do 3 divided by 12. That's you're making 0.25% every month more, and that gives
Huh.
you
Double,
double
double the
of
amount.
your original profit
Hmm.
they're making, right?
Okay. Okay. So I think
And that's how
they
compounding.
understood
Like you,
compounding.
you
Yeah.
just break it down to smaller pieces. You literally just break down a small. Don't think of the end result. You break it down to smaller pieces and show them changes. Now, if it's 10%, see if it's 10%, you're only making 2 crores. If it's 20%, you're making
No.
23 crores.
Bro,
Now
this is just going.
you're
No,
getting
no. So
it's like 10x, 10x, 10x. That's it.
10x, 10x right now. Hmm. I mean,
By every 2x increase, it gives you a 10x difference, and that's the better way to put it out.
yeah. I mean, I think at this point we've bombarded them with information. So
Right,
to end this, uh, okay, what should be the first step for any 18, 19, 20 year old who's watched up until, who we've shown
I
that
didn't get you there.
how
I'm sorry. I think
so sorry, yeah, what should be the first step for any 18, 19, 20, or even 21 year old watching this,
right,
who has learned about finance and seen
right,
compounding, should do now?
right.
What should they do just after closing this podcast?
Before getting to compounding, see, I am a big believer in reading certain books. I wouldn't be like read 5, 10, 15 books, bombard, read Warren Buffett strategy, read Peter Lynch. No, just read one or two books, understand the basics of the market and whatever. So I remember reading this book, this exact book here. Okay, it's
One
called
upon Wall
One
Street.
Upon Wall Street. Okay, by Peter Lynch. Even if I'm 35 and if I'm a professional trader or investor, this book is always going to be useful in my life. There's one thing I do not care if it's SIP, if you invest $1,000 once a year, nothing. I just want you to. It's a strategy or it's an investment strategy which I'm going to share with you. A layman person, an average person on the road, okay, will know more than an investment analyst if he's aware of his surroundings.
Hmm.
Use this line for every aspect. Today, say you reside in Andheri and from that place onwards, okay, you must be aware of something like a relaxo footwear. Today, if you stay in Kulaba, you want to know that brand, but people fail to understand the general public, probably 90% of the masses, has relaxo footwear chappals. You go on the train is filled with relaxo footwear chappals. You enter a Bata store at 1 p.m. or at 7 p.m. If it is full, no matter if it's selling, buying, nothing. If it is full, means people are of course buying, of course is making revenues. Why want to buy a Bata stock? The
Huh.
investment analyst isn't going to go to a Bata store. He will look at the his statements, his cash flow, all of that. I can probably just, if I'm just driving around in Bandra and if I see a new Starbucks store opening, I will like, okay, Tata Coffee is growing.
Hmm.
Okay, I feel sorry, I feel Tata Consumers is growing. That's my way of putting, because Tata Consumers is the
Yeah.
owner of Starbucks. So
Huh.
I was like, hey, it's just direct. If I see two new stores opening, means they're making revenue, means they're growing, means in the next 2 years, I feel I with my $100, I become $140. It
Yeah.
is absolutely, you do not have to know. Sorry,
Look
go
at
ahead.
stuff around you. Look at stuff around you. I mean, that's what you said.
That's it. You
I
just
mean,
gotta roam around. Like it's
yeah.
as stupid as it sounds, it's the best way of doing it.
Yeah, and also if you look at, no, let me take it to a macro level. If you look at India, in the long term, we know that, as Warren Buffett says, never bet against America. I think he said that, right? And
Right.
that's what you said, like never bet against India. In the longer run, the Indian market, Indian economy is growth, and the Indian stock market is going to grow as well. And
Right.
maybe just look at Sensex or Nifty 50. Those.
That's one way of doing it. But that's also a fake kind of parameter, because sometimes, example, COVID hit, markets tanked. In a couple of months, 9 months, the Sensex reached probably all-time highs. 10 months reached all-time highs. Today, all-time highs. Oh, sorry, 9 months, but 10 months back, all-time highs. Okay, but is it actually supporting your employment, the growth? To an extent, yes, but your unemployment levels are also that high. So it is difference between Nifty, Sensex, and growth rate can also differ. People are like, "Hey, market is going to crash," but I was like, "Oh, market is still recovering. So if
Yeah,
it's gone so high without much recovery, if it recovers, it's going to go higher." But it's not a bubble. I don't want to give advice here. Not going to put anything. I'm just speaking of what I've heard, what I've seen around. So I would say it's not a great pattern. Oh, Nifty Sensex. It's fine because that's only top 30 companies, top 50 companies. That's all. It's not going to give you a gist of what India really does. I would just say read. I My bad
yeah,
habit was
yeah.
I
That's what I
started
was
reading
saying.
very
That's what I
late.
was saying. Like if you cannot look around you, just look at the top 50
And
companies and study them.
don't read Economic Times. The only paper I suggest is Mint. It's basic and it's awesome. It has startup news, it has stock market news, it has basic economic related news. It's awesome. I love that. That's my go-to paper, let's put it that way. And with again, India being digital, you have minty papers. You don't need to scroll through, or in fact, I was reading about this one app called Flip It News. Okay, and this is my way of doing it off lately. They were started by a couple of people from IIM Ahmedabad, and they just raised a seed round, and it's only on Android, I believe so. You literally just flip. It's like in shorts, but more intuitive, and it has relative news. And I was like, I'm just like, probably I just get done with a shower, I come out, and I like, I need to get work done, but I've not read the paper. Literally 2 minutes, not even 2 minutes. Headline. Okay, if it's interesting, read it. If it's not, flip through. Okay, read the headline. At least you know about ye hua hai market mein. This is what
Hmm.
happened in India. You don't need to
Hmm.
read the details. Only if you find it interesting, you read more. So I would say download apps like InShots, Flip It News, or follow people like Anushka Rathod on probably Instagram, who make
Yeah.
reels of such brilliant content that I probably didn't know these facts exist.
Yeah.
Someone like me who knows quite a bit about trading investing, I was like, hey, wow, I did not know LVHM owns these brands. I did not know about the Samsung family has to pay 50% tax in Korea. Like, it's just stuff that will interest you or will rather spike your interest in finance, fintech, whatever. So
Yeah.
just read, look
Just read,
around. That's all.
look around, read, just observe what's going around you, and yeah,
100%.
keep listening to Table Talk with TLC. We'll see you soon enough. Thank
Always.
you, Ronnie, for being here. I hope you had a good time.
Thank you for having me here. We should probably, connect again. Probably once I
Yeah,
launch, we could do something. And yeah, hope everyone likes this and
cool,
enjoys what we've spoken about and learns a thing or two. That's the difference you really want to make. So thank you for again having me here.
cool, cool. Great.
Purchase your tracks today.